What's up, good people? I hope you're having a fantastic morning, afternoon, evening, whatever time you're either watching this live stream or watching this video. It's a beautiful, beautiful, beautiful Saturday morning here in Southwest Florida where I live, and I thought it would be a perfect opportunity to talk with you guys about real estate and paper assets. Before I do that, I need you guys to do me a big favor. I need you to hit that thumbs up button right now. Hit it and smash it hard. That will help YouTube's algorithm push this content out to more people so we can grow our community. So please, 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 as you tap in, please hit that thumbs up button. If you're watching this in its video format, hit the thumbs up button for me. I really would appreciate it. It helps me out quite a bit. It helps the channel out quite a bit. The last thing I want you to do for me is consider getting up to 12 free stocks from Weeble. Weeble is offering you guys up to 12 free stocks when you open up a new Weeble brokerage account, deposit any amount of money in that brokerage account. They're gonna give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of the video. Go click on that Weeble link. Open up that new Weeble account today. Go get that free stock, go get that free money. I'm gonna also send you a free Weeble tutorial video to walk you through how to use the Weeble app so that you can start buying your favorite ETFs, your favorite individual stocks, and start building your wealth right away. All you gotta do is DM me on Instagram at RichardFain28. Let me know you've opened that Weeble account and that you've funded the Weeble account. And then I'm gonna send you that Weeble tutorial video to walk you through how to use the Weeble app to start making your investments to build your wealth. I'm reflecting back on the first 9 months of 2023. We have roughly 90 days before 2023, guys, is in our rear view mirror. And I've been asking myself, why haven't you been investing more in real estate? Matter of fact, I've been getting a lot of questions from subscribers and followers on Instagram asking me the same question. Why have you abandoned using real estate for income as a means to multiply your money in 2023? And, you know, guys, I'm a real estate guy. I've been invested in real estate for income for 25 years. So I love real estate. I love putting money in real estate and multiplying my money. I love using 5-to-1 leverage to buy real estate. I enjoy real estate as a investment vehicle to multiply my money and build wealth. But at the end of the day, it has to make sense from an economical standpoint to do it. And when you think about real estate, the housing market, 1 to 4 family dwellings, the reason many Americans, including myself, are not buying real estate right now for 3 main reasons. Lack of inventory, right? High mortgage rates, and the existing inventory, right, is extremely pricey, right? It's expensive. Those 3 reasons are why I'm not buying real estate right now. And those are the 3 reasons why most Americans who would be in a position to want to purchase a home are not buying. Commercial real estate is a whole nother ballgame. Commercial real estate is in worse shape, right? It's in worse shape. It still has some of those same characteristics, though, as residential real estate. You go look at a commercial piece of property at a decent location, it's going to be expensive, right? You're not going to have a lot of inventory, right? And then you're still in that same old trap with high mortgage rates. You know, if you go back to 2019, we were not in this situation. We actually had adequate supply, right? And we had some decent demand, right? So when you got good supply, matching demand, prices tend to be lower. And we had that prior to the pandemic. Interest rates were not bad prior to the pandemic. They were in that 4% range, somewhere in there, you know, maybe high threes, low fours. So it was certainly in a situation where people could afford the monthly payment based on the mortgage rates. And when you look at price point was 40% lower than it is right now. So you had a good price point, right? Back in 2019, I could buy a 3-bedroom, 3-bath, 2,500 square foot house here in Southwest Florida in a really, really desirable community for $400,000. In today's environment, I would have to pay $800,000 for that same property. And on top of that, you got to pay a 7.5% interest rate compared to, you know, a high 3, low 4 fixed interest rate. And you had more to choose from. So in today's environment, post-pandemic, it's very hard for a real estate investor like me who buys 1 to 4 family dwellings. See, I don't buy 50, 100, 200, 300 unit apartment complexes. That's a whole different animal, right? Those type of investors can still make money. But for us people who buy 1 to 4 family dwellings to put tenants in them, it's very hard. It's very hard because of these extremely high interest rates. And it's very hard because of these extremely high prices. So what's the alternative? You got to find some other way to multiply your money other than real estate. And for me, that's paper assets, right? ETFs, index funds, mutual funds, bonds, individual stocks, right? Those are paper assets. And they're trading at a discount from their historical highs. Plus, I don't have to worry about a 7.5% interest rate that I have to pay the bank in order to borrow money to buy the asset. I don't have to worry about that with paper assets, right? All I got to do with paper assets is understand I don't have to be the expert, and then go out and find investments that will give me the type of return I'm looking for. That's it. That's all I got to do. And then have some patience and allow that money to multiply itself in the stock market, right? Through paper assets. That has been my investment of choice in 2023. Right? Because it doesn't take much for me to do that. I do have to have income, right? I can't invest in paper assets unless I have income to invest, money to invest. So I gotta have money to invest, but if I have that money and I have some patience, then I can actually go out and find really good paper assets to put my money in to multiply it. Let's take one prime example. The S&P 500 index, right? That represents what? The broader stock market. It's the top 500 companies in America in that fund, right? Every industry, every sector. When I look at that as an investment opportunity, it has done extremely well in 2023. Had you invested in the S&P 500 at the beginning of 2023, right now, year to date, you would be up 15% on your money, because that's what the S&P 500 has done year to date from a rate of return on investment, up 15%. Now, contrast that to had I bought a 1 to 4 family dwelling rental property at the same point in January of 2015. Correction, in January of 2023. I would not be up right now 15%. I wouldn't be. I'd probably be break even or maybe even losing money. Why? Because of interest rates. When interest rates are that high, guys, it's too expensive to borrow money. That is probably, for an investor like me who invests in 1 to 4 family dwellings, that's the most expensive part of the transaction, is the interest I got to pay the bank to borrow the money. It's not necessarily the property taxes or the property insurance or repair and maintenance. It's really the mortgage expense is the biggest piece that sucks away all of my cash flow. And without cash flow, it don't make no sense. It makes no sense to invest in real estate unless I can get the proper amount of cash on cash return. And I don't believe, and you guys drop comments down in the comment box. Let me know if you've invested in a piece of real estate. I'm talking about 1 to 4 family dwellings. I'm not talking about major apartment complexes. I'm talking about 1 to 4 family dwellings. If you have invested in one since January 2023, and you have better than a 15% return on your investment. Let me give you an example of what I'm talking about. Let's say you bought a property for $500,000. That was the purchase price. You used 5-to-1 leverage. So you put in $100K. You went to your bank and got $400K, right? So really your total investment in that deal is not the $500K. It's $100K, because that's what you took out of your pocket to put in the deal. $100K. Now, in order to get a 15% return on that $100K, you'd have to net $15,000 on that rental properties. I'm talking about net. Once you pay your mortgage expense, once you pay all your property taxes, your property insurance, your repair and maintenance, right? You gotta have net coming into your pocket off of that $100,000, 15 grand. I don't know if you can do that. At least I couldn't do it. Not in Southwest Florida where I live. I couldn't get a 15% cash on cash return like I could and can get in the S&P 500 index, right? So I go find me an ETF or an index fund that tracks the S&P 500 index. Then I can get that type of return. I could have put my 100K into that ETF or that index fund in January, and right now I would be up 15%. Again, couldn't have done that with 1 to 4 family real estate for investment purposes. I couldn't have done it. That's the reason right now I'm not buying real estate. That's the reason many other investors like me are not buying 1 to 4 family residential real estate for investment. That's why a lot of Americans are not purchasing new homes to live in. They can't afford it, right? Right? The inventory that's on the market is not affordable for most Americans. The interest rate that they're going to have to pay the bank to borrow the money is too high. 7.5% on average is too high for most Americans, right? And then, like I said, when you do look at the existing inventory, it's too expensive. I mean, you're talking about a 40, 50, 60%, 100% increase in home prices since the pandemic. That's just way too much. Now, here's the question. When will I be able to start investing in real estate again for income? 1 to 4 family dwellings. When will other investors be able to start getting back in and it makes sense from a money standpoint, making money standpoint? I think it makes sense when interest rates come down. For me, like I told you guys, the biggest expense that I have associated with a property that I buy is going to be the mortgage expense. See, I don't pay cash for my properties. People that pay cash for their properties, they may be able to pull it off, but I can't pull it off because I have to go out and borrow money. I choose to borrow money. I choose to leverage to buy real estate. And really, until interest rates come down, and I would say they need, for me personally, they would need to be under 5%. I would need to be able to lock in a 30-year fixed rate mortgage under 5%. If I can do that at some point in the near future, then it probably makes sense for me then at that point to start buying real estate again for income. But until that happens, I'll just continue to redirect my dollars to paper assets. I just will. I'll redirect my dollars to paper assets where, guys, I'm telling you, I'm going to make a windfall because I'm still buying the S&P at a discount. Think about it. The S&P 500 in December of 2021 was trading around 4,700 points, right? In today's environment, it's rallied at times and gotten itself to 4,500 points. So in my opinion, it's still on sale. I'm going to still keep buying. And here's the good news. I believe when we start this run again, when the Fed start reducing short-term interest rates, I think that's going to trigger a stock market run, the beginning stages of a new bull market. And when that happens, I believe the S&P 500 has an opportunity to go past 5,000 points, maybe even 5,500 points at some point over the next couple of years. And think about it, guys. If I'm buying the S&P right now at 4,500 points, 4,400 points, 4,600 points, and then in a couple of years when it's trading at 5,500 points, look at all the net worth I've captured, increase in net worth, all the money that I'm going to make. See, that's what I'm hanging my hat on. Some people may not agree with that, and that's okay. You have to figure out what's the best option for you to multiply your money. But right now, man, it's hard to go against paper assets. It's hard, man. And again, for most of us, 99% of us, all you need is the S&P 500. Find you an ETF that tracks the S&P 500 index. And that's where I would put my money. That's where I'm putting my money. And on top of that, I'm a tech guy. Even though I'm not like a guy that knows really a lot about tech, I know tech is the future, so I'm a tech guy. So I invest in technology companies, but I don't go out and pick them individually. What I do is I go find me a ETF that has the top tech companies in America in that ETF, and that's what I'll invest my money in as well. So that and the S&P 500, right? Total stock market. I'll also put some money in the total stock market because with the S&P 500, that's just the top 500 companies in America. I want to have even a wider category of companies. And that's where the total stock market comes in, because I can find me a total stock market ETF and get up to 3,500 companies in that particular ETF, right? All publicly traded companies, but small companies, medium-sized companies, big companies. So I get just a wider band of the total stock market when I do that. So really, those are my 3 top paper assets that I buy right now. VOO, which is the S&P 500, VGT, which is the tech ETF I just talked about, and then VTI, which is the total stock market. All are Vanguard ETFs, but I buy them on the Weeble app. So if you guys are interested in paper assets and you're new to this and you're not quite sure how to start, where to begin, first place to start is clicking on that link down in the description box of this video and open up that Weeble brokerage account. Weeble offers a really good self-directed brokerage app. Once you open that up, they're going to give you up to 12 free stocks, put some money in it, send me a DM on Instagram, and I'm going to send you a Weeble tutorial video to show you how to buy these paper assets that I'm talking about, that I'm buying instead of real estate. Just DM me on Instagram at RichardFain28. Let me know you've opened a Weeble account. Let me know you funded it, and I'm going to send you that free Weeble tutorial video. But yeah, man, real estate is in my blood. Like I said, I've done it for 25 years. And I'll buy it again. But at the end of the day, for me, guys, I don't know about you, but for me, it's about making money. I don't really care what the asset class is. As long as it gives me a chance to have the cash-on-cash return I need, I'm great. Right now, real estate doesn't give me that opportunity. I can't make the cash-on-cash return I need to make to justify me putting my money in real estate. Not for income. Of course, I buy real estate to live in. I just bought a house 5 months ago, but I live in this house. But if I'm buying it for income, I'm not sure how I justify putting $100K into a 1 to 4 family dwelling where I'm gonna make break even or negative return over taking that same $100K, putting it in the S&P 500, where year to date, I would have had a 15% rate of return on my $100K. I can't justify that. There is no justification for it. Now, again, I'm not talking about people who buy large apartment complexes. That's a whole different animal. Whole different animal, because right now you have scale on your side when you do that, right? If I got 2, 3, 4, 500 apartments and they're all rented out at, $1,500, $2,000 a month, that makes sense. You can make that work because of the number of units you have. But when you got a small number of units, 1 to 4 units, and you're paying the top of the price point for them, you also got to pay a 7.5% interest rate to the bank to borrow the money. Bro, it just don't work. Like I said, if it's working for you, drop me some comments and tell me exactly what you're doing to make it work. Better yet, make a video, tag me in it, or send it to me, and I'll put it out to the rest of my following here on YouTube and on Instagram so that people can see how you're doing it. I can't make it work. And I've been doing this for 25 years, so I'm not sitting here saying no one's making it work. But if you are making it work, I'm talking about 1 to 4 family residential dwellings for income. I'm not talking about 10, 15, 20, 30, 50, 100 apartment complexes. That ain't what I'm talking about. I'm talking about regular residential 1 to 4 family. If you're making that work and you're getting at least a 15% return or better, COC, cash on cash, then send me a video or something, or the numbers, and tell me how you're doing it so I can share it with the rest of this audience who watches my videos. Because if someone out there making that happen, I really would like to know how they're doing it, how they can outperform the S&P right now in real estate, small real estate. Please share that with us so that we can pass that along to other people who want to buy real estate right now, because I don't understand how it'll work. But that's just me. Another alternative that you can think about putting money in to multiply it is a business. That's a great way, guys, right now to multiply your money. The best time to start a business is in bad times or volatile times. Why? Because you have less competition. Most people want to start their business when things are doing much better. Everybody else is trying to start a business. They don't want to miss out. That's when most people want to start a business, in good times. I think the best time to start a business is in bad times or volatile times. Again, it's all about competition. In good times, you have more competition. In bad times or volatile times, you have less competition. So if you have a solution that can solve a problem that people have out in the marketplace, then think about putting money into starting a business, right? Because I think right now you ain't gonna have that much competition because most people ain't gonna do it. Already 80% of the people in America work for somebody else. There's only about 20% of people who actually are entrepreneurs. 80%, they work for somebody else. They just don't want to have the hassle of starting a business, or they don't feel like their idea is a good enough idea that it'll solve problems for people. But I think all of us have the ability to find solutions to problems. If we look closely, if we study what's going on out in the marketplace, there are a lot of problems out here in our marketplace. And they're waiting on people like you and I to come up with solutions to solve those problems. That's how you start a business. You don't need a lot of capital. You don't need a lot of people. Just start it with yourself. You just got to be smart enough and in tune enough to what's going on in the market to figure out what the problems are. And how do you find out what the problems are? Just go on to social media, man. Go on to any platform and just start watching and listening to what people are saying. People will tell you what their problems are. They'll tell you what difficulties they're having. And then all you got to do is take one of those problems and figure out a solution for it, and then deliver that solution to the marketplace to see if people will accept it. I think if you do that, you put yourself in a good position to be able to put money in a business that you definitely will get more than a 15% return on if you do it right. That's my opinion. That's my opinion. Guys, I only talk about things on this YouTube channel that I've done and that I have seen success. Now, I've done some other things that have not been successful, but that's the thing about me. I don't worry about the things that don't work. All I concentrate on are the things that work. See, I'm one of these guys who I don't really worry too much about my weaknesses. I don't try to improve my weaknesses. What I try to do is build on my strengths. Whatever I'm good at, I just want to amplify that 10 times, 20 times, 30 times, 40 times. That's how I make my money. I don't worry about, I'm not real good at this. Let me try to get better at that. I don't care about that. I don't care about the things that I'm not good at. I don't care about where my weaknesses are. What I care about is, what am I strong at? And how do I magnify that strength 10 times, 15 times, 20 times, 30 times? Because if I can magnify that strength, if I can build on that strength, I'm gonna make a lot of money. See, a lot of people have it other way around. Oh, I'm good at this. Since I'm already good at it, I'm just not gonna continue to build on it. What I wanna do is just get better at what I'm weak at. Because that's the wrong approach, in my opinion. We're gonna all have weaknesses. I think where you make your money is you have to capitalize on your strengths. You have to continue to develop your strengths. You gotta amplify them. You gotta multiply them 10, 15, 20 times. If you do that, you make a lot of money. Anything that I'm not good at, I can hire somebody to do that. I don't need to improve what I'm not good at. I can hire somebody who is good at that. I don't need to improve on that, right? If I'm not a good marketer, but I'm a good speaker, I just continue to build on me being a good speaker, and I hire a marketing company to market it for me if I'm not good at marketing, right? If I'm good at marketing, but I'm not a good speaker, guess what I'll do? I will get 10 times as good as a marketer, because an average speaker, but with great marketing, will make more money than a great speaker with poor marketing. I'm telling you. Look at some of these people you listen to on Instagram and on social media. A lot of these people are not that good at speaking, but yet and still they make a bunch of money. I'm not very good at speaking when it comes to having every word right and not stuttering and not saying stuff too many times. I'm not very good at that. But what I am good at is exposing my content to people through marketing. I'm good at that. And I'm an okay speaker. So what I'm telling you is if you have an idea and you want to start a business, this is the best time to do it right now. Why times are volatile / bad, because you won't have as much competition. And at some point, real estate will make sense again financially, just not right now. Like I said, when the Fed start reducing short-term interest rates in 24, 25, your 30-year fixed rate mortgage goes under 5%. I think that's the right time. I don't believe prices will ever go back to pre-pandemic. That's not going to happen. Prices are going to still be relatively where they're at. As more inventory comes on the market, prices will slightly come down, because the more inventory we have, the more supply we have, will bring down prices. Right now, we just don't have enough supply in order to make that work. Prices won't come down because we don't have enough inventory. New construction is going to take a while. Why? Because national home builders don't want to do a lot of spec homes, and they don't have any buyers for those homes. They don't want to be taking all the risks. So new construction is going to take some time. As interest rates come down and then affordability goes up, more people can afford to buy, then you'll see more and more national home builders start to ramp up. And then once that inventory hits the market in a couple of years, then we'll see prices come down, we'll see interest rates come down, and that's when I'm gonna start buying real estate for income again. But not until then. And up until that point, I'm just gonna keep buying paper assets. I'm gonna keep dumping my money into the S&P 500 ETFs, index funds. I'm gonna keep dumping my money into VGT, Vanguard Information Technology, VGT. I'm gonna keep dumping my money into the total stock market, Vanguard Total Stock Market, VTI. And I'm gonna still buy some individual stocks like Tesla, like Apple, Bank of America, Wells Fargo, NVIDIA, Meta, right? I'm gonna still buy those when it makes sense. And when I have my money on the sideline, I'm gonna have it in a money market account somewhere, making me north of 5%. Right now, I got one over at Vanguard. Man, I'm telling you, I got money sitting in that thing. It's earning 5.27%. And I got over $400,000 in that account just sitting there waiting to strike. But while it sits there, guess what I'm doing? I'm collecting a nice 5% return on it. I'm okay with that, right? $1,500, $1,800 a month just to sit there until I'm ready to move on something. That's how we got to be smart, guys, with our money. That's how we multiply our money. We got to be smart, though, right? And you got to stay plugged in, right? I don't mean you got to be watching the news every single day and panicking. What I'm saying is understand what's going on around you. Understand your game plan. Understand your strengths versus your weaknesses. Magnify the strengths. And I'm just talking about when it comes to investing. I'm not talking about in every other aspect of your life. I'm talking about when it comes to making money, don't just focus on what your weaknesses are. Focus on your strengths. And then multiply and magnify the strengths. That's where you're going to make your money, right? So that's what I recommend you do right now, starting today. And if you do some of these things I'm asking you to consider, who knows? Who knows where you'll end up at the end of 2023. I'm going to have a fantastic year, guys. I'm going to have a fantastic year, not because I'm an expert, because I'm one of these guys, I just take action. See, I know I don't need to be an expert to take action. All I need to have is a little bit of historical history backing up whatever I'm getting ready to put my money in, and then I'm gone. I'm in there, right? And I've won more times than I've lost. So we don't have to be the expert, right? We just have to have a little general knowledge. More than anything, we got to take action. See, 80% of building wealth is taking action. 20% of building wealth is knowledge. But most people think they need 80% knowledge and 20% taking action to build wealth when they got it flip-flopped. So let's not keep ourselves on the sideline waiting on the perfect time. The perfect time is right now. It's better to be in the market than trying to time the market. Get in. Open up that Weeble account. Get up to 12 free stocks. Be in a position to be ready to start buying. On Monday morning, next week, be in a position to start building wealth. What are you waiting on? What are you waiting on? No better time than now to build wealth, guys. This is the chance of a lifetime for a lot of us, especially for some of us folks that are getting a little older. Now, I get it for some of these 20-year-olds, these early 30-year-olds. They got some time. But I'm telling you, man, if you're past 40 years old and you right here, sleeping on this opportunity, you better wake up. You better wake up. This may be your last opportunity, man, before you get to the golden years. This opportunity may not present itself for another 20 to 25 years, man. So for you folks that are 40 plus, you better jump on this thing. You better figure out a game plan, or you're going to miss your opportunity to transfer wealth to you and your family. Don't miss this opportunity to transfer wealth, guys. Right? Please don't miss it. If you want them 12 free stocks from Weeble, like I said, guys, you got to click on that link down in the description box. Open up that Weeble account today. Go get that free stock. Go get that free money. Send me a DM on Instagram at RichardFain28. Let me know you opened the Weeble account. Let me know you funded it. I'm going to send you the free tutorial video to walk you through how to use that app to buy individual stocks and to buy ETFs so you can start building wealth immediately. Again, guys, hit that thumbs up button for me. Please hit that thumbs up button for me. Like I said, it's very important that we hit the thumbs up button if we want to grow this community and get it out to more people so we can help more people get to their financial freedom. So please, please, please hit that thumbs up immediately for me. If you're stopping by the channel for the first time, please consider subscribing. Consider sharing the video as well. There's somebody out there in your network, guys, that need to hear this. They need to hear this so that they don't miss this opportunity to transfer wealth. They need to hear this. So please share this video. Let people know that it's out there. And I really would appreciate that. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.